what is it that was so good, given the fact that this really is a hardware story, not necessarily a technology story, which is what's going on with the rest of the tech world?
Sure. I mean, look, if you look services, that continues to be rock of Gibraltar for them, and that mid-teen growth. I think that's something from a multiple perspective that investors are really focused on. But look, the reality is we've talked about it so many times in the show over the years, like other cycles have been disappointing from iPhone. If you look 15, 16, iPhone 17, it almost looks like a surprise upgrade cycle. Especially in China. China was the headwind, now looking like a tailwind. And then also it comes back to Cook. I mean, 10% politician, 90% CEO, playing nice in the sandbox in DC. That's going to have an impact as well. And this is all the drum roll to AI. I mean, that is what you're playing for here when it comes to Apple over the next year.
Is it? I mean, I guess that's really the key question. Is this still the promise of AI? Or is this really a question of we all have phones that are broken and cracked, and we've been waiting for a long time, and we're going to now upgrade to the i17. They are capacity constrained at this point, which was the biggest hamper for them. And it's a completely different story than the AI spend that we're seeing in the other companies, and a very different kind of trajectory than maybe what we're seeing in the other space.
Yeah, and that's been the frustration, right? Because, I mean, if you look at Apple, this AI party where it was 9 p.m., it's now 10:30 p.m., that party goes to 4 a.m. Apple, they've been out on the outside looking through the windows, right? So now the focus is consumer AI revolution. It's going to go through Cupertino. Now, how does that happen? Comes down to that Google DOJ win. That's huge. And now, candlelight dinner, Sundar, Cook, I believe it's a matter of time. They're going to announce a massive AI partnership on Gemini. That's what you're playing for, because you're 25% of what you're playing for is the stock's cheap relative to what I think could happen on an iPhone 17 services. But what you're really playing for here is they get to the AI party. They announce that deal over the next year. This is a $350, $400 stock as AI finally comes to Cupertino.
Doesn't that, though, completely not illegitimize, but basically challenge this idea that you have to spend in the AI race to keep ahead? If you have a company like Apple that basically figures we can partner with people, we don't need to spend, and we can still benefit, does that just show you don't need to participate in the arms race for every other company that is?
Yeah, look, I think for them, it's unique because there's 2.4 billion iOS devices, 1.5 billion iPhones. So they've built the mountain, right? The field of dreams. I mean, they've built it, they will come. So now it comes down to, like, from a consumer perspective, you have to monetize that on the consumer perspective. I think AI revolution comes through Apple on the consumer side. When you look what's happening on the enterprise, look, it's a fourth industrial revolution. The reality is that from this tech earnings, going into eating chocolate tonight and Sour Patch Kids and whatever else on Halloween, you go in as a bull more bullish relative to everything we've seen from hyperscaler, Amazon, Microsoft, even Meta, stock down, but why is it down? They're spending more and more, and it speaks to our view. This is only second inning of the 9-inning game.
It really changes, though, how you analyze these tech companies. If they are taking on AI servers and other relatively short-lived assets, it means that depreciation charges start racking up. How does that change how you think about these companies and the otherwise cost discipline that they need to exercise?
Yeah, and look, and I think that's the debate, right? Because if you look at these companies over a year, then you wouldn't have bought even the last few years. But the reality is it's an AI arms race. You're essentially building out the new economy on the consumer, on the enterprise front. And that's why you have to be able to look out 2-3 years to what this is going to look like. Microsoft, a good example. I mean, you essentially have almost built a Microsoft within a Microsoft. You look what's happening at Google, right? New York City cab drivers bearish on Google and Alphabet. If you look back over the last 6 months, now win DOJ, search, death greatly exaggerated. That's actually a positive relative to AI. You look at Amazon, finally Jassy's saying, like, hey, don't forget about us. And that was a huge pop the champagne moment for them last night.
We saw a huge bulk of the Magnificent Seven report earnings this week, and I want to just take a look and take stock of what we've learned. And our team put together a fantastic series of charts really looking at the capex expense and just what this is compared to revenue. What you can see is that revenues are expected to increase the likes of 5% in Amazon, expected capex rise 51%. Google, expected revenue rise 6%, capex rise 43%, a similar story for Microsoft. At what point does that become a concern, that they have to fund an increasing amount of this with debt said that it's increasingly going to depend on leverage and the benevolence of private creditors and all sorts of other investors who are going to finance this.
Yeah, and to that point, that's, I think, also outside Mag 7 in terms of companies that are basically going to have to raise debt. They're going to compete from a capex perspective. When it comes to big tech, I mean, $1 trillion in the balance sheet, generate $300 to $400 billion a year. So that's why the reality is they are fueling this AI revolution. But if you look at capex, look, a year ago, capex going into this year is $220, $230 billion. That was the thought. It's actually going to be $380 billion. So I think investors continue to underestimate the scale and scope, and that's the fuel in the engine. That's what's fueling all of this in terms of the capex cycle, and that's why in his leather jacket, the godfather of AI, Jensen, continues to be the chip that really fueling the AI revolution. But AMD, TSMC, Broadcom, it speaks to our view. I mean, I've seen it even like authentication with, what we're doing on Orb side, where you're seeing like authentication, cybersecurity, CrowdStrike, Palo Alto. This is where it's all going, second, third, fourth derivatives.
Yeah, we get Palantir on Monday, and then we get the rest, so we can see exactly how that's playing out. Just taking stock, though, of what we've heard. And people think of Dan Ives, they think of Tech Bull. And you've been right. You've been 100% right with a lot of this. I'm just wondering, what are you seeing that does seem excessive, that does make you think, hold on a second, there is something here that makes me just a little bit nervous that there's some good money going after bad in small pockets that are getting a little bit bigger?
Well, to that point, I mean, like, I just got back from basically being gone a month around the world trying to understand, like, especially in Asia, what demand and supply looks like. So for the real ones, demand and supply is 10 to 1, okay? But just because you say AI 30 times in a conference call doesn't make you an AI play. So when you say what worries me, that's what, but Lisa, that's like I focus on, like, we have our, our ETF, like, who are the winners, who are the fakes. So it just speaks to my view, like that, when you say what worries me, it's just separating out. You need to own the winners. You can't just own an AI play because they have great PowerPoints.
Is Caterpillar an AI play?
There's a better chance of me playing in tonight's like Blue Jays like Dodgers game than Caterpillar be an AI play. That's my opinion, but it speaks to the view, like, you have to be careful about who's AI, who's real, what are the derivatives. And I think as an investor, that's how you separate, like, look at the spending, who the winners are, second, third, fourth derivatives, obviously messy of AI, Palantir being one of them.